All right, welcome everyone to the Intro to Forex Trading webinar. Appreciate your time here this evening. I had a request to cover candlesticks and the basics of understanding candlesticks and some of the patterns on charts and how to make sense of them. So that will be our topic tonight. So before we get started, just type in a quick yes to make sure that the sound levels are good. Make sure you can all hear me and we can go ahead and get started. So thank you, Lucinda. Okay, anybody else out there, Pete or Michael or David? Or you can type in a quick yes so I can make sure you hear me. That would be great. I know Lucinda can. Okay. All right. I'm going to go ahead and type a message in there because I'm not hearing back from anybody else. Okay, if you can't hear me, or, well, if you can't hear me, you can't hear me, but type in a message in your chat. Any questions you have go along as well. Be sure to type them into your chat box. That would be great. All righty. I'm going to share my desktop now. Okie dokie. So everyone should be seeing my screen now, okay? All right, so let's talk about some of the terminology of candlesticks, okay? Candlesticks are the primary charts that are used by most traders, at least in my experience, okay? So candlesticks give you a great understanding as to what's happening for that time frame as to the movement of the price, okay? If you recall from past webinars, each candlestick represents a fixed period of time, okay? That could be 1 minute, it could be 5 minutes, it could be an hour, it could be a week, it could be a month, it could be a year, or a day, different time frames, okay? We use a 30-minute chart for our trading strategies. And that's something we go into more detail in our private coaching and our more advanced sessions. But for today, I just want you to understand the basics of the candlesticks, okay? Now, candlesticks, you see, comprise of two parts, basically. There's the real body, the body of the candlestick here that I'm circling, okay? And then you have what's called the shadows, or I prefer to call them the wicks, to kind of stay in the candlestick theme, okay? So the body tells you the open and the close, okay? The open and the close for that fixed time frame, okay? The wicks show the high and the low for that time frame, okay? So once again, the body tells you where the price opened for that time frame and where the price closed for that time frame. And the wicks, high and low, for the price for that time period, okay? For example, on this one here, the bottom of the body here, the bottom of the body, that would be considered where the price opened for that time period, okay? Now, on this particular candle, the price increased for this time period. Let's call this a 30-minute time frame. So the price opened here and it closed higher at the top of the body, okay? Now the wicks on top, that would be the high for that time period, and the bottom wick, the low, that would be the low for the time period, okay? So we have the low price, the high price, the open, and the close. And that gives you a lot of information just in that little one candlestick, okay? A great deal of information. So now, why are the candlesticks different colors? Well, Typically, you either see black and white candlesticks or red and green. We use red and green, okay? In this example here, we're using white and black. So white signifies a price that increased. So the price closed higher than where it opened, okay? And black down here, this candle would represent a price that closed lower than where it opened. So on the black candlestick, the price would have opened at the top of the body, and the price would have closed at the bottom of the body here, okay? All right? Then you have your high for the period, which is the top of the wick, and the bottom of the wick would be the low for the period, okay? All right, once again, if you have any questions as we go along, is that always? Yes, it is, Lucinda. That is always, yes, okay? Now, we use red and green, okay? So green, the price would close higher than where it opened, and red would be where the price closed lower than where it opened, okay? All right, very good. All right, so, I mean, candlesticks have been around for centuries, literally, okay? I mean, some of the first recorded uses of candlestick concepts were found in the 1700s. Japanese were using them. In fact, you know, there's a famous book, Steve Nielsen's book, Japanese Candlestick Charting Techniques, okay? If you want to go deeper into it. So candlesticks are our preferred method of charting. And what we're talking about tonight, gang, is what's known as technical analysis. When you're reading the chart and making your trade calls based on the information that you see in the charts, okay? All right. Now let's talk about some of the trading patterns, some of the candlestick formations you'll see, okay, when you are trading. And these are very powerful signals, gang. Something you need to start understanding when you start to trade, okay? Now, each one of these represents a candle, okay? So again, we'll just say a 30-minute time frame, since that's the chart that we typically trade from, okay? All right. Now, what we're looking at here, well, this is a candle, even though there's no body to it, right? Here we have a candle where we have the open and close at the same exact price, which is why that horizontal line there, that's your open and close. That's the body, okay? Then you have the high for the period, which is the top wick, and the low for the period, which is the bottom of the wick, okay? Now, this particular candle is known as a doji, D-O-J-I, a doji, okay? And when you see one of those pop up on your charts, that's usually indicative of a market that is kind of indecisive, okay? What do I mean by that? Well, let's say we were in an uptrend. Let's say we had a bunch of green candles in a row, all heading up, and then a doji comes out. Well, that doji would indicate to me as a trader that that uptrend is probably losing its steam, okay? It means that particular trading, that particular market on that particular currency pair is losing its steam. It's becoming a little bit indecisive, okay? All right. Now, hopefully you've all heard of the term bulls and bears. If you watch kind of financial news, they often mention the bulls had their way today or the bears had their way today. What they're talking about, these are old Wall Street terms, basically. And the bull, when the market is bullish, that means the prices are increasing, okay? The buyers are taking control of the market. And opposite, when the market is bearish, that means the prices are declining. That means the sellers have control of the market, okay? All right? So when you see a doji like that, it's usually indicative that, hey, the market's kind of at an equilibrium, it's indecisive. Let's take a step back and see what the next candles bring us, okay? Now, there's a couple more versions of a doji. For example, this one here is known as the gravestone doji, okay? Now, the horizontal line is at the bottom of the candle, isn't it? Okay. So you have the open and the close occurring at the bottom of this particular time frame. Okay. Now, this is usually found at what's called a market top. And that means at the very top of an uptrend. Okay. And that makes sense. Why? Well, because of this. The price opened here on the left-hand side of this horizontal bar, this horizontal line, right? And then the bull stepped in, the buyer stepped in and drove the price way up here to the top of this doji. Okay. But then the seller stepped in and they sold the price all the way back down to close where it opened. So this upward pressure, this upward momentum that the buyers did have initially couldn't be maintained. And the sellers jumped in there and drove the price back down. Okay. All right. So that's why you find this at a market top. So when you see this at a market top, that's usually a pretty good indicator that that uptrend has lost its steam. I'd be expecting either some sideways movement or perhaps some movement back to the downside. Okay. All right. Now we also have what's known as the long-legged doji. Okay. This one has one or two very long shadows or wicks. Okay. This too can be a sign of a market top. Okay. Because again, we had an upward pressure that couldn't be maintained. And the sellers pushed it all the way down, but then the buyers came in, brought it back up to where it closes where it opens. Okay. Kind of doji kind of means that the trend has lost its sense of direction, and it's time for you to take a step back and say, okay, what's going to happen next? Okay. So when you see a doji on a chart, whatever trend you're in, you should be aware that that trend is probably coming to an end, at least temporarily. Okay. All right. Now, these next two are two of my favorite because they're such reliable indicators. And they do a great job when you're on the charts of giving you a good heads up as to whether or not that trend is going to continue or stop or go the other direction. Okay. First one, the bearish engulfing pattern. Okay. This is a major reversal pattern. And what do I mean by that? Well, let's take a look at this first candle here. This first candle is a green candle. That means the price closed higher than where it opened, correct? Price closed higher than where it opened. Then you have the wicks with the high and the low, correct? So we're in a mini uptrend here. Price is moving up. But then the next candle comes out, and it's this big red candle where the price opens at the top of the body and closes at the bottom of the body here. So the price declined. And this price decline totally engulfs the previous green candle, doesn't it? Wicks and all. Totally engulfs it, okay? So it's a very powerful signal that the next candle coming out, if there was a third candle coming out here, you would most likely be going back down to the downside, okay? So when you see that on a chart, you see a candle totally engulfing the previous candle with the opposite color, very good likelihood that that trend will be reversed, okay? Major reversal pattern. And then, as you might imagine with the bearish engulfing, the bullish engulfing is the exact opposite. So here, the first candle, the price declined in value, right? Opened at the top of the body and closed at the bottom. So we're in a small downtrend here. Well, then the next candle comes out and it's a big green candle, totally engulfing the red candle, wicks, body, and all. Okay. So I would expect this next candle coming out, moving up to the upside. Okay. Pardon me, I'm fighting a little bit of a sniffle here. All right. So those are two very powerful signals, okay? Very powerful signals that I look for constantly when I'm trading. Okay. Now, the piercing pattern. The piercing pattern. Well, that's composed of a two candle formation in a downward trending market. Okay. So we're in a downtrend, right? We're in a downtrend symbolized by this red candle. Okay. Price closed lower than where it opened with this red candle here. Okay, great. We're in a downtrend. But then you get a green candle coming out where the price closes higher than where it opened. And it closes about halfway up the previous red candle. Now, in my experience of trading, I've been trading for many years, the piercing pattern is not quite as powerful as like the bullish or bearish engulfing, okay? But it is a highly reliable indicator that this downtrend, for example, will be stopped in its tracks, okay? I would expect either a sideways moving candle or a slower move up on the next candle here. Okay. So the piercing pattern, very reliable, not quite as powerful as a bullish and bearish engulfing, but very powerful indeed. Okay. Now the dark cloud cover, as you might imagine, is the opposite of the piercing pattern. Okay. Here we are in an uptrend. Okay. We have a green candle. Price closes higher than where it opened. And then the next candle coming out is a red candle, and the price closes lower than where it opened. And that close is about a third of the way down our previous green candle. Okay. So once again, I would expect this uptrend to be stopped cold, and I would expect the next candle to be trending sideways or starting back down to the downside. Okay. All right. And if you can read there, when it closes, when the dark cloud cover candle closes at least halfway down the first candle, and the further down it closes, the more convincing the reversal. So right here, about a third of the way down, like I said, I'd be a little bit more conservative. I would expect maybe another sideways moving candle, and then perhaps down to the downside. Okay. All right. The hammer, also very good pattern that I look for a lot when I'm trading live. Okay. The hammer, or the hanging man, sometimes referred to as well. Now it's one candle, so we're gonna analyze both of these candles individually, okay? And even though one is green and one is red, they both kind of mean the same thing. Here's what I mean. Usually, you'll find one of these hammers at the bottom of a downtrend, okay? The bottom of a downtrend. Now, so imagine in your mind, if you will, we had a couple of red candles here. We got a couple of red candles, all right, that were preceding this green hammer that came out, okay? So what we look for there is that, okay, well, the hammer came out, the price opened here at the bottom of the screen, the bottom of the body, and the price dipped way down, right? The bears drove the price way down. But then the buyers stepped in and drove the price way back up and closed just above where it opened, okay? Just above where it opened. So that's a very powerful signal that downward pressure could not be maintained, okay? And now I would expect this downtrend to have lost its steam, and we could be going back up to the upside, okay? Now the same thing with the red hammer. The price opened here at the top of the body. The sellers stepped in, drove it all the way down, but then the buyer stepped in, drove it all the way back up to close close to where it opened. Still below it, but close to where it opened, okay? So even though green is slightly more bullish than the red here, both of these hammers are telling me that this downward trend is losing its steam, and we should be heading back up to the upside. Okay? All right. Now, as you might imagine, the shooting star is kind of the opposite of the hammers. Okay? So here we have an uptrend. We have two green candles going up. Everything's looking good. If you're buying, sounds good. Excellent. Okay. But then we have a shooting star come out, which is this third candle here. And here the price opened here at the bottom of the body. It shot way up here, but then the bear stepped in and drove the price back down. It closed close to where it opened. Very clear signal that that particular trend is losing its steam. Okay. All right. So if I was in a buy, if I was expecting this price to continue going up, I'd be very cautious here, because that shooting star is an indicator that that uptrend is losing its steam a little bit. So I would want to wait to see more confirmation, more candles, before I would continue on with my buying. Okay. All right. Now, as you might imagine, we have the morning star and the evening star too. These are very good patterns as well. I love these patterns. All right. So the morning star. Okay. Here we are on a downtrend. Big red candle. Price is moving down. Okay. The bears are clearly in control. But then we get a small body here, small body green candle. The price closes slightly above where it opened. And we have small wicks, okay? Small wicks to the upside and to the downside. That's also a signal that this downward trend is losing its steam, okay? And sure enough, that's confirmed. We have another green candle coming out here, moving to the upside, okay? Very clear piercing pattern here, isn't it? Didn't engulf this red candle, but it's a very good piercing pattern when you compare this red and the green, okay? It's closing more than, let's say, about 3/4 of the way up on this red candle. And now I'll be looking for my entry points for a buy, okay, to be bullish, okay? And of course, all of our students, we take the technical analysis, we take the candlestick charting, we take our moving average strategies, we take our support and resistance and our other indicators that tell us exactly when we get into a trade and exactly when we get out of a trade, okay? All right? All right. Now, the evening star, well, that is a reversal sign as well. Here we have a green candle moving up nicely, nice little uptrend, okay? Then we have an evening star come out. Looks very similar to the morning star. Small body, small wicks, okay? Small body, small wicks, okay?
Yep. Okay, yeah, and I see some color now on these things, these doogies.
Pete, I'm putting you back on mute, buddy. All right.
Okay.
So we have, even though it's green, we have that evening star come out. Sure enough, it's a reversal indicator. And we have our red candle moving back down to the downside. Again, pretty good dark cloud cover compared to this big green one going up. All right. Very, very powerful signals, guys. And this is something we drill into our students big time when we do our private coaching sessions, okay? Now, I want to show you a trade that I did live this morning with some of our students. It was a fantastic trade, okay? Fantastic trade. Now, again, don't worry about trying to see these numbers over here. I know it's too small on your screens probably, but just look at the candlesticks. So now you know what all these green and red candlesticks mean, correct? All right. Now, what you're looking at here is the US dollar Canadian dollar currency pair, okay? US dollar Canadian dollar currency pair. Now, the current price on this pair, on the far right-hand side here, is 1.21126. 1.21126. Okay? That is about 21 Canadian to equal 1 US dollar. Okay? $1.21 Canadian to equal 1 US dollar. So the US dollar is stronger than the Canadian dollar. Okay? Right now. And that's because we've had some good news on our US economy recently. Now, the news this morning at 6:30 this morning, Mountain Time here, where I live, we had some news come out on the Canadian economy. Okay? The Canadian economy released their manufacturing sales. Oh my goodness, Craig, what does that mean? Manufacturing what? Well, all we have to do is click on the details and we see that who creates this? The source for this statistic is Statistics Canada. Okay? And it's released every month, about 45 days after the month ends. What does it measure? Well, the change in the total value of sales made by all manufacturers in Canada. Okay? Why is it important? It's a leading indicator of economic health. Manufacturers are quickly affected by market conditions, and changes in their sales can be an early signal of future activity, such as spending, hiring, and investment. Okay? Now, I always make the point with our students that I absolutely cannot guarantee you will ever make any money trading, even with our coaching strategies and everything else we give you. But what I can guarantee is it's illegal to guarantee that. That certainly is our goal, something we work for, strive for, hold your hand for every day. But what we can guarantee is that our students become extremely disciplined and extremely well educated as to what's happening not only domestically, but internationally, globally, as it relates to interest rates, unemployment rates, market trends, trade balances. You will have a deep and profound understanding as to what moves the markets and why, and how that affects you in your personal economy and the economy here in the States. And okay, you go into detail and you understand central banking rates. You understand why they're important. And I can almost guarantee you that the news will make a lot more sense to you. Okay, and you will understand how politics plays a role in this as well. So this morning at 6:30 a.m., Statistics Canada released their manufacturing sales numbers. And you see they were expecting a negative 0.5% decline in manufacturing sales. Well, at 6:30 this morning, this negative 1.4 popped in here. Okay? That's a pretty big miss. That's a pretty darn big miss. Okay? So as you might imagine, because of this number's in red here, that the Canadian dollar got much weaker this morning. And sure enough, okay? Now, this is where some of the indicators come in. What you're looking at here is exactly how all of our students' charts look. This is what we teach them. And what you're looking at here is detailed technical analysis that all of our students understand. By looking at these lines, understanding candlestick patterns, understanding how to read this chart right here, they know exactly when to get into a trade and exactly when to get out of a trade. Without any guessing or hunches or anything else. They know exactly when to get in and exactly when to get out. So what we were doing on this trade this morning, gang, this top red line here that I'm pointing at, that's a resistance line, okay, a resistance line. And this green candle right here that I'm pointing at right now, that was just before 6:30 this morning. Okay? Then the news came out that negative 1.4 hit, and oh my goodness, look what happened. This kicked off a huge uptrend, didn't it? I mean, an enormous uptrend lasting all day long. Now, this uptrend consists of the US dollar getting stronger and the Canadian dollar getting weaker. And that was all tied to that negative news on the manufacturing this morning on the Canadian dollar. So understanding the news, understanding how to interpret the news, understanding when it's being released and what's currencies to watch for is a crucial part of trading and your understanding. Okay? So this gave us over a 100 pip move this morning. It was beautiful. Now we didn't take all 100 pips, but we made some nice trades this morning, made some nice gains based on this one trade alone. Okay, it was beautiful, 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 and that's what we're after. We're after high probability trades, okay? Okay, high probability trades. That's what we're after, and that's what we work on every single day here with our students. Okay, so that was just great. Now, realistic goals. Again, trading is not easy. Okay, if it was easy, the whole world would do it. Trading is not easy. It takes hard work, discipline, study, mentorship, coaching, all those things, in my opinion. Okay. If anybody could do it, can just jump on or buy a book off of Amazon and start becoming a trader, more people would do it. Okay. It takes time, it takes training, it takes hard work, commitment. That's what we're about. And there's plenty of people out there that will sell you snake oil that says, hey, you can make all kinds of money overnight trading Forex. In my opinion, those folks are just, selling snake oil. It's ridiculous. It's just not true. Okay. Can you make good money trading Forex? Absolutely, you can. Okay, absolutely. But you need to set realistic, reasonable goals that you strive for daily. And the Forex market is flexible enough for you to trade 24 hours a day. All right. Now, my goal, listen, I'm after about 20 to 30 pips per day. All right. You can do 20 pips per day, which is a reasonable goal. That is life-changing money for most people. It really is, depending on how much they have to trade with and the levels that we get into more in detail with the coaching program. But 20 pips a day is a very reasonable goal. It's about 400 pips per month. That is life-changing money for most people. That's the kind of money that can quit your job or even add to your income, pay off debt, whatever goals you have. Okay. realistic goals that can help you achieve what you want to achieve in life. That's what we're after. It's not pie in the sky. Oh, you're going to achieve, hundreds of pips or even thousands of pips per month or per day. I've seen those claims out there. They're nonsense. They're bogus. They're ridiculous. Just my opinion, gang. Okay. What we're after is consistent, sustainable profits with high probability trades. And by the way, of course, our systems don't work all the time. They're very flexible. They're highly effective, but no system out there is 100% effective. Otherwise, everybody would be using it. Okay. If you hear somebody telling you that, please run. Don't walk the other way. Our goal is for our clients to be right more often than they're wrong, and we do a good job of achieving those goals. Okay, gang. Now, tomorrow morning, again, trading live with our students. And you see, we have some really, really big news announcements tomorrow. Now, I'm not going to be up at 2:30 a.m. to trade all this news on the Great British Pound. Okay. Pardon me. But there are ways to trade that without being awake or at your computer. That we go into detail also in our private coaching. But I will be up for the 6:30 a.m. news, where we have more news on the Canadian dollar, wholesale sales, the US dollar building permits are being released. And then at 8, really, 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 really big news. The Bank of Canada releases their monetary policy report and their rate statement. Okay. Now, the Bank of Canada is kind of Canada's version of our Federal Reserve. It's their central banking system. Okay. So they're going to be giving kind of their State of the Union on the Canadian economy tomorrow at 8. They'll be talking about the unemployment rate, inflation, trade values, growth, job growth, just across the board. How's Canada doing? Okay. And being able to interpret that, read that, understand that is crucial to proper trading. Because if they have good things to say or bad things to say, that can create big moves in the market. Whenever there's a big central bank talking, the whole trading world is listening. Whether it's the Bank of Canada or the Federal Reserve here in the States, or the ECB, the European Central Bank, or the RBA, the Reserve Bank of Australia, or the Bank of England, or the Bank of Japan, any of those. And all of them are documented, and we know exactly when they are speaking and when they're releasing their reports, gang. You have to understand that. You have to know that. All right. Hopefully you learned some good things about candlesticks tonight. Okay. If you didn't, don't worry. We'll go over them again in the future. And hopefully you understand the power of the news and the trades that we do here on a daily basis here at EPL Forex. So thank you so much for your time tonight, gang. Once again, as I always do, if you have any questions about what we did tonight, please give me a call. Feel free. Okay. Oh, I'm almost always on. This is stuff I live and breathe and eat and sleep every single day. So if you have any questions, feel free to call me on that number. And if you don't get me, I'm probably with a student. I'll get back to you on my next break. But if I'm not, I'll be glad to chat with you for a few minutes. Okay. Have a great evening, gang. Thank you so much for being here, and we will talk to you down the road. Bye-bye.